Well, good evening, all. I'm Epstein, and here we are with your metal market wrap-up, and this wrap-up is for Wednesday. We're at the 28th of February, 2024, 5:30 p.m. Central Time. I'm early because there isn't a lot for me to do. I'm waiting on all the data tomorrow. Let me show you what I'm talking about. Tomorrow you get the all-important PCE price index data. Now, the market's widely anticipating an increase because of the CPI and PPI numbers. That comes out, though, at 7:30. We get the jobless claims. Are they going to climb, or are they just saying super strong right here? We get that at 7:30. The Chicago Fed PMI, 8:45. National Association of Realtors January pending home sales. That comes out at 9 o'clock. In between there, by the way, you're going to get the natural gas storage report from the IEA. That comes out at 9:30. And we get the Kansas City Fed manufacturing composite and business activity indices at 10. The other thing that's been going on is we're coming to the end of earnings season. You're wondering why the stock market's down. Well, you had Salesforce, you had a bunch of the companies come out, and while some smaller companies are doing well, some of the big names didn't do that well on these reports, and there's some punishment taking place in them. So once that's out of the way, we're back to looking at what we usually do. Where are we on the jobs reports? That's going to be so important. A week from Friday, you get the big jobs report again. Is it going to show continued strength or weakness? With this PCE that's coming out, then market will start figuring out, what's the Fed likely to do? You do know that what's taken place, and it's taken a while, is over the past 8 weeks, the marketplace has come in line with what the Fed thinking was of 3, maybe 2 cuts for 2024. So they got rid of the idea that it was going to be a March cut. Then there was going to be maybe a May cut. Now it's June, maybe after that. There's all kinds of talks. Whatever the month is, they're throwing that out right now because nobody knows for sure. And guess what? If you're listening to all the different Fed members, and I talk about it. I have a section in my newsletter. It's called Fed Talk. Then I put down the Fed member that's speaking and the highlights of what they said in their speech, prepared speech, or whatever they said in an interview. And to a person, they're watching the data. They'd rather be a little late than early right now. They don't see the economy restrained because the consumer is so strong. That is the theme you keep hearing. And what you need is labor to show that weakness. Then the Fed has to start moving to get ahead of the 8 ball, so to speak. They're not there just yet. So tomorrow's an important day. We saw that the currency markets were a little bit of everywhere. The dollar was up, but so was the British pound and the euro. All right. When we look at the gold market, I had the battle that I wanted. Market had pulled back to the 18-week moving average of closes. It's held it at this point. You can see the sideways action that has been going on. And in that sideways action, the swing line, and this is a study that I wrote many years ago, it looks, here you look to see what the market of the prior bar did. Now, this works on 1-minute charts, 5 minutes, 15, whatever it is. Wrote it so that I could look at a market and have an idea, is it trending up, down? What's the risk associated with the trend from that point to take out that low? And that would break the uptrend as an example. What's an uptrend? We have to understand the definition. In an uptrend, you have higher lows and higher highs, which you absolutely have. Then I look at moving averages. Now, you had a convergence of moving averages. You have the same number practically for the 18 and the 100. That's called a bullish convergence right there. Now, which way is it going to go? You came down today, challenged them perfectly, held them. That doesn't mean anything. You got to get through tomorrow's reports to show what this market's going to do. If it takes off to the upside, there's a potential that maybe you go to the upper band. If you start cutting through all this, well, in this market, before you get to that lower band, you got to prove you can get through the 200-day average at 2021.80. And gold's going to be looking, what is inflation looking like? What's the dollar going to do off that number? There's a lot to digest tomorrow. And you were overbought today. I'm content doing this. I've got my hands right here. I'm friendly. I'm not bearish at this point, but that can change. But would I deploy or tell my clients to deploy is a better way to phrase it, their money. Not yet. We want to see what this report looks like. When you look at the gold-silver ratio, well, you're at 91.05. All right, you're back up near the high. That's favorable gold to silver. Silver's been caught in the longest period of time, literally the whole month of February, just drifting sideways, finally got to the lower Bollinger Bands, went up, challenged both the 100-day average in the upper band, might even challenge the lower band again. It's either building a heck of a base or a top that it's going to break from. We will find out soon, but this is how you create big moves, and that's the May, not the March contract. In the copper, I have been looking for a pullback. I told you and others in my report, I said, you don't want to fade this. This was the break. No buying as we get in front of Lunar New Year. What do you need? Stuff arriving on docks. You don't have dock workers there, so market pulls back in China. Then everybody comes back. Oh, I've got to buy goods, so demand goes up, and now you're settling back in. Well, we've all been waiting for the government in China to announce what their economic plan is. We've seen little parts of it, but if you'll remember, they had their Congress, and they said in March they would release more particulars. I don't know what that means. I don't know the date. They don't give you that, but you're getting a pullback. There's a lot of support in the copper market. It comes in starting at the 379.90 level, 380.70, and right up to the 18-day average of 380.90, let's call it. So that is where this market might be headed to roost as it tries to figure out what does it do next. In the platinum market, we've been in a bit of a downtrend here. The market keeps failing against the 18-day average of closes. It might want to go down to the 872.5 level. So I'm watching, and the metal markets other than gold don't look good. Gold is the only market that's looked okay, but it is overbought. And in the dollar, you continue to be caught between the 100-day average and the 18. It hasn't changed. It's been that way over a week, waiting to see which way this wants to break out of that. And in the meantime, you're bringing in the Bollinger Bands, narrowing them in. Eventually, it's got to break out of them one way or the other. It's going to be a fun, interesting time. All right. And what I'm trying to do is position my clientele using the morning subscriber videos to get ready for it. So tomorrow, the first report I'll put out will be before we get to the before we get to the PCE numbers. But for the ETFs, it'll be in time because I put that out at 9 o'clock, and I'll be covering 40 charts. If I see things for my full subscribers in the morning, well, actually my full subscribers, I put out special updates as well. So if I see something to do, I write, boom, it's called a special update. Buy here, sell there, do that, and here's the reasons why, or I just leave that out, just do the trade. There's many different ways that I write. But you wake up to the idea of trade ideas. That's the whole idea here. You have a cup of coffee, you're waking up, you're seeing what's going on. I talk the chart action, I talk technicals, I'll tell you about the fundamentals that have come out. I will bring up points of entry, exit, profit objectives, stops, what I see and why. You don't have to take it. You don't have to do anything. But I think you'll find that there's logic. I use the daily and the weekly charts. And I think you'll see that I try to prove that at least that pattern seems to be there in place. And I do the same thing again in the ETFs, and I break everything into categories. So we'll have an individual stock category as well there. And I give you what I'm seeing, why I'm seeing it, and where you go. It's a heck of a way to look at it. How do you get this? It's simple. You just go to my website, go into research. Where else do you think it would be? It's the logical spot. You can move your cursor up here. It'll take you there. And the ideal thing is you take both, because sometimes I'm not doing things in the futures, and all of a sudden a futures-related ETF has got something to do, and away you go on those. I'm Ira. You have yourself a good evening. Waiting for that PCE tomorrow. Take care.